Good afternoon and welcome to the Market Closing Show. This is our collab show between Business Today and India Today Television. It's 3 p.m. and we are here to get you all the market closing action. Let's first take a look at the top headlines in the markets, corporate and the financial worlds. Expiry day volatility grips Dalal Street as markets swing wildly between red and green. Nifty hovers around 25,900. Sensex trades around 84,700. Real estate stocks lead the gains while IT stocks drag. India's GDP growth is expected at 7.3% for July to September. Supported by rural demand and government spending, Reuters poll notes muted private investment and slower urban consumption, signaling uneven growth across key sectors. Tata Motors officially relaunches the Tata Sierra. Bookings begin on the 16th of December with delivery starting on 15th of January. The introductory price of 11.5 lakh rupees challenges top sellers in the segment like Mahindra Scorpio and Hyundai Creta. The new Sierra has both petrol and diesel options. Air India passengers will see the biggest transformation in customer experience in 2026, says CEO Campbell Wilson, even as global supply chain delays stall its fleet upgrade. With zero deliveries from its 570 jet order, the airline is leasing planes and refurbishing older aircraft to maintain capacity. White House reacts to backlash against Donald Trump's H-1B visa stance, signals a nuanced common sense stand on amid criticism from his own MAGA base, insists U.S. workers remain the priority as trillions pour into chip, battery, advanced manufacturing facilities. Let's straight away look at how the markets are trading at this hour in trade. Well, when we look at the Nifty, well, like you pointed out in the headlines as well, 25,900 and thereabouts is where you have the Nifty. In fact, we have tad bit slipped now below that level as well. We are down by about 60 odd points on the Nifty. In fact, we are at the day's lowest point in trade. Remember, this is the expiry session for the Nifty contracts as well. The Nifty Bank has also slipped in the last half an hour of trade, and you can actually see the Nifty also trading absolutely flat with just a positive bias at this point in time. Let's look at the top laggards. It is the IT sector that had been holding up in the trade over the last couple of sessions. You see about a 0.5% downtick on that one and profit taking there. The top Nifty laggards on your screens right now. Adani Enterprises now near about 2.5% lower in trade. Trend Infosys also down in trade by 1 to 1.5%. So you can see IT stocks that are down in trade. The banks as well. HDFC Bank down nearly 1%. Power Grid, Kotak Mahindra Bank are the other top laggards as we see at this point in time. Let me go across to our colleague, in fact our guest first, Mr. Avinash Gorakshakar, the market expert who's joining in for the show. Avinash ji, warm welcome to you. Thank you so much for taking the time out. Well, what do you make of this consistent lack of strength at higher levels in the markets? Now we've breached even 25,900 yet again. It's the expiry session, a lot of volatility. In the last half an hour, we've also seen some more pull-off.
Yeah, I think good afternoon, Sakshi. I think clearly today being the expiry day, there's a lot of volatility in the market. I think this kind of volatility was expected, today. But I think what is hindering the markets are clearly two factors. One is FIIs are completely absent from the markets. They've been selling, continuous selling from them. And more importantly, with the rupee turning weak, I think that has created a little bit of dampener in the near term. Also, the primary markets supply of paper continues to be extremely strong, and I think this is one factor which most analysts would agree that supply being high on the primary market side is putting a lot of pressure on the secondary markets. And I think clearly, there are a lot of events which are yet to unfold. I think we've got the US trade policy, the RBI policy in the month of December. I think these are two key events, where the market is going to closely watch. And obviously the Q3 numbers, which would come post December quarter. I think all these three, if they turn out to be quite positive, then I'm quite hopeful that in the month of January, once the result numbers start coming out, you're going to see a decent amount of bounce back because, finally equity as an asset class has to bounce back. Earnings growth has been pretty good. And we are very hopeful that the next year should be equally promising. That is FY27.
Okay, fair point. In fact, let's try and also understand the biggest buzz on the D Street of late over the last couple of sessions, as always, has actually been the changes in the labor codes that the government has announced already. Now, remember, Commerce and Industry Minister Piyush Goyal has asked the states to implement the new labor code immediately to pass on the benefits to all the classes of workers. Speaking at an event earlier today, he also said that the new codes notified last Friday empower women and workers across the country. Let's listen into what he had to say.
It is a very balanced, well articulated, well thought of compilation of 29 laws in these 4 codes. It ensures good practices, the occupational safety of our workmen, minimum wages at a national level for all workers, social security, including for gig workers. In a way, it provides opportunities for our sisters and daughters, women folk to come into the formal workforce. It is truly a game changer that Prime Minister Modi has come out with. I'm sure the states will now come out with the necessary rules and the enabling legal framework to be able to get the maximum benefit of these 4 labor codes.
All right, let's straight away go across to Avinash to understand a little bit more on the key sectors and the kind of companies that will stand to benefit with this kind of a new labor code coming into implementation. Avinash, what do you think in terms of opportunities for investors there is? How should one really look at, firstly, the new age tech companies, platform companies, because this is for the first time in labor codes that the gig workers and platform workers have got a legal definition and a place as well. Now, while it is good for the social security of such workers, there is a cost attached to it that may impact the margins for some of these companies like Zomato or Swiggy. All of these companies have actually come out to say that, yes, we support and welcome this move by the government, but at the same time, analysts are penciling in a 1.5 to 2.5 rupee per food delivery order or per quick commerce order that they will have to incur. How do you see and assess these companies and the impact there?
No, I think Sakshi, you're right in saying that this is going to obviously increase the labor cost element for gig workers, especially companies like Swiggy and Zomato. I think clearly this is a business where I think they would definitely pass on these costs finally to the customer. But I think in a way it is good because the gig worker opportunity and the gig worker kind of population has increased significantly, and this is a very historical labor reform which I think eventually is going to help the gig workers quite significantly. Of course, there are many other sectors where there have been some unorganized workers, unorganized labor, which contributes to the productive base of any company. So there also, I think you're going to see a lot of companies which employ temporary labor. They'll also have to provide for these labor regulations adequately. So I think net in the near term, it's going to be a little cost expensive for these companies, but eventually will be passed on to the customer. So it's a good thing. I think labor reforms in India are definitely improving now, and I think with this change, you're going to see a lot of labor productivity also gathering momentum. Finally, the productivity aspect has also got to be taken into account. But net, it's a very structurally positive development, which I think eventually the markets will digest the fact that this increase in cost are going to be passed on to the customers. These companies are unlikely to bear any cost on their own profit and loss or balance sheet, so it's going to be passed on.
Absolutely. So it's going to be passed on. So might not be too long before you actually see from both Zomato, Swiggy and the likes of these platform giants to start to talk about whether there is a surge in marketplace fee. Watch out for that in case that could be seen as a measure to offset the impact of such surge in cost because of the labor law. Now remember, we were talking about the entire absence of foreign investors in the Indian markets that has kept the sentiments low for a fairly long bit of time. The good news with foreign investors slowly returning to India after months of pulling out funds is being seen as a light at the end of the tunnel. The excerpt from a conversation earlier today with market veteran Punita Kumar Sinha, who told Business Today Television that with small and mid-cap excesses now corrected, FIIs could soon be returning to D Street and could also outperform global peers as well. Let's listen into what she had to say.
Yes, I think so. I think the sentiment is definitely improving. we've had a relative underperformance of Indian equities, but the flows in India remain strong, and the FIIs also, I think, will start to come back to India, given that valuations are now looking a little better. And more importantly, I think our macro situation is quite stable. So the Indian economy is in good shape. There are no excesses right now that we should be worried about, that we were worried about, say, a year ago on the valuation side. Those excesses have been kind of gotten cleared out. The small and mid cap sector, where there were excesses, has also underperformed. So there also, I think things are looking relatively better. And versus many of the other economies, I think India's domestic economy remains a big shelter for any global shocks. We have our strong domestic economy, and we have strong domestic market inflows that keep coming from the SIPs. So I think from that perspective, India should do much better. The only thing that, one is still waiting to see is the tariff situation, how that resolves itself. I think even there, I'm hopeful that where we started off and the worst point of the tariffs being as high as, 50% or more, it's already, likely that it'll be below 25% in some cases. And so our exporters, which have been hurting, could also see some relief.
All right, so we could probably see FIIs returning to the street, but Avinash ji, give us an understanding, what are the key triggers that the markets really are penciling in to finally come out of this long haul of consolidation that we have been seeing? Will the return of FIIs put the markets in a better spot? And therefore, once that sign comes into focus, what should be investor strategy?
No, I think it's very difficult to tell you exactly when the markets would go up because last 1.5 years, I think the markets have delivered virtually no returns, and most of the retail investors are getting impatient as to why returns are not coming. And I think two reasons: one is there's a large supply of primary market paper. Secondly, if you look at the corporate earnings, it's only in the second quarter that numbers have started improving. So I think the real trigger for the market could come in from the corporate performance, from the October to December quarter. Hopefully, if the volume growth and the margin improvement comes in the December quarter, then I think most investors are going to look at India because now valuations have become extremely cheap. As Punita Sinha mentioned, that this is going to be a market where I think serious money is going to come in good quality businesses and at valuations which have now corrected sharply. So this has been a very large underperformance kind of period. So my sense is that once the US trade policy happens, hopefully the Q3 numbers are out by mid-January next year, you could see a little bit of buying coming in because at these valuations, there's nothing to lose. And India now remains a very attractive investment destination. So, after China, which got a lot of money after COVID, my sense is that now you're going to see a lot of money, foreign money coming to India also. I think the trickle will start sometime after middle of January once the results start coming. And hopefully the US trade policy by that time is more or less finalized.
All right, since you're talking about the US trade policy, there's also a focus on the US as far as the backlash against Donald Trump's stance allowing H-1B visas for now is being seen. The White House is now defending the move as a nuanced stance. The administration now insists techies are welcome as they will help build America's most complex factories. The White House insists that Trump's position has been mischaracterized, stressing they ultimately wants Americans in those jobs truly. Let's listen in to what the White House had to say.
Is it MAGA to support American workers being replaced with H-1B visa holders? Are Americans not capable of filling most of these positions?
Who supports getting American workers getting replaced?
I know the president mentioned that he wanted to bring in some workers that he could eventually send back in regards to...
The president does not support American workers being replaced. You are mischaracterizing what the president said. The president wants to see our American manufacturing industry be revitalized better than ever before. That's part of what he's doing with his effective use of tariffs and cutting good trade deals around the world. That's why he's recruited trillions and trillions of dollars in investments into our country. Those are creating good paying American jobs right here at home. As for the H-1B visa issue, the president has a very nuanced and common sense opinion on this issue. He wants to see if foreign companies are investing trillions of dollars in the United States of America and they're bringing foreign workers with them to create very niche things like batteries. He wants to see that at the beginning to get those manufacturing facilities and those factories up and running. But ultimately, the president always wants to see American workers in those jobs. And he's told these foreign companies that are investing here, you better be hiring my people if you're going to be doing business in the United States. So there's been a lot of misunderstanding of the president's position.
Avinash, how do you assess the impact on the IT sector? We've been seeing in the last couple of sessions, last few weeks, that IT sector has been showing us some uptick, after a long haul of painful period that we have actually seen for the IT sector because of the US trade deal that continues to be in a limbo. What exactly would you say as far as the IT sector is concerned? Are we out of the woods? Is this the time to really look at it again? Are things the sticky issues on H-1B visas, could they be on the back burner soon?
No, I think definitely IT looks interesting and attractive, from a medium to long-term horizon. And I think, the Q2 numbers have been very good. In fact, we have been talking on your show on companies like HCL Tech, Coforge, Infosys. So I would not be surprised that, the December quarter is supposed to be a softer quarter, but January to March, I think should be a very strong quarter for most IT companies. And I think, the best part is that fortunately or unfortunately in India, there are not very many pure AI companies. So the business is stable, although, our revenue model, our business model is largely service driven. So I think there's a lot of scope for growth. Typically, I think, once the US India deal is signed up, you could see a lot of US India deals getting, routed through many large IT companies. And I think the best part is most of these companies are sitting on cash. They've got at least a near 1 year kind of order book on their, on their business. So typically, somebody who is a patient investor should start nibbling into these companies, especially the large cap ones like HCL Tech, Infosys, Coforge, and smaller ones like say Persistent and KPIT. But I think you need to give a slightly longer time frame for the real growth potential to kick in maybe after March, April next year.
Okay, fair point. In fact, today's flavor has also been with respect to the Ayodhya, Ram temple completion with Prime Minister Narendra Modi hoisting the saffron flag, marking the completion of the Ram Mandir's construction. The focus is also now returning to Ayodhya's transformation from a spiritual hub to an infrastructure, tourism hub. The city is in fact witnessing a massive shift as it is now emerging as a global spiritual destination, as also India's new economic hub as well. In fact, in an exclusive conversation with Business Today, Nutan Gupta, the Chief Operating Officer of Ease My Trip, explains how Ayodhya is reshaping India's spiritual and travel sector and significantly boosting the tourism economy as well. Let's listen into what she had to say.
Definitely, one can see the way we have seen the government's initiatives on making it into a global map. It's going to be a smart city. We can see the roads, we have see the airports, and which can clearly is visible. We can see the on ground fast work at a fast track. What's happening? Definitely, Ayodhya is going to be the pivot and center point of religious destination. And like we said, that it is coming into, I wouldn't say a golden triangle will typically be Jaipur, Agra, but definitely is going to be a spiritual triangle. Varanasi already is very popular. And it is very close to Prayagraj, which has shown great numbers when we saw Mahakumbh recently. And so the overall region is very popular. We're seeing the number of stays as well of people. Earlier, they were 3-4 nights. Now it's week stays. Increasing, there was a lot of earlier, the budget accommodations were more popular, but we now see even the premium accommodations, there is an increase in 25% nearly growth on those bookings. Of course, there is a big, large number still go to homestays and mid-level accommodations. So overall, when we look at our booking trends, the demand for programs which ask Ayodhya to be a part of their religious itineraries, I think it is very going to be one of those on the India map. It's going to be definitely a spiritual destination, a global destination, which I think should be aimed at.
Right, Avinash, just help us understand how would you look at this opportunity with respect to the hospitality sector, the tourism sector at large when it comes to Ayodhya becoming the next spiritual, economic hub as well. In fact, now remember, Uttar Pradesh has already set a target of $1 trillion economy for themselves by 2029, within which they expect Ayodhya to contribute about 25% as well going forward from here. What is the sense that you have as far as the opportunities for investors lie in the hospitality tourism sector?
I think Sakshi, the biggest beneficiary from this is going to be the hospitality sector in Ayodhya. I think you're going to see a lot of hotels and hospitality kind of players coming in this place. Already, large players like Lemon Tree, Indian Hotels, and plus a lot of mid-tier players have started entering this market. And that is the reason because religious tourism is now going to be a very big opportunity. This government has promoted religious tourism in a very, very big way. And a country like India, where religion is very important, religious tourism is now gathering momentum and it's going to be a very strong kind of segment in the hospitality sector. So I think, my sense is that over the next, say, 2 to 3 years, a lot of capital investment would come in and obviously customers would benefit, but even players who put their money here are going to see a very strong risk reward because this market is still a very nascent market and religious tourism, which Ayodhya has promoted, is going to gather more and more momentum as, this is an iconic kind of temple which not only in India but even abroad people are very keen to visit.
Absolutely. Any key stocks that you would be willing to bet on, looking at this as an emerging newer theme or a long-term theme?
See, I think there are many companies which already have hotels here. I think there are smaller players like Praveg, which has already got a full-fledged hotel in Ayodhya. You got Indian Hotels, Lemon Tree. So I think, these 2, 3 companies one could possibly target looking at specifically Ayodhya in general. But definitely, I think there's a long runway ahead for all these players to benefit, from the kind of marketing and the kind of visibility the government has been giving to Ayodhya. And I think this will definitely be profitable for all these players over the next, say, 2 to 3 years.
Okay, let's actually quickly look at the markets close and then we'll come back to you, Avinash, with all the queries that we have from our viewers. 25,860. So we've slipped to the low point of the day. Near a 100-point loss is what we have at this point in time. 25,860 for the Nifty. A week closed on the expiry session. In fact, what we are seeing as the last week expiry for the month of November for the Nifty. Nifty Bank also slipped lower, gave up all the gains that it had garnered through the course of the day with respect to PSU banks, private banks inching up. IT sector, another heavyweight sector that slipped lower by 0.6%. Let's also pull up the mid caps and the small caps. That's where also we saw some pressure build up towards the end of the session as well. Remember, both these sectors were still holding up. And when we look at the kind of moves that we've been seeing there, you would see that there is some pressure emerging even in the broader markets like mid and the small cap sectors as well. Of course, what we've also seen is that some of the sectors, they continued to move up in trade. We had a lot of real estate, metal stocks moving up. So you can see a lot of those moves coming in on your screens. SBI, Shriram Finance, Dr. Reddy's, all of these stocks pulled up in trade. SBI Life, HDFC Life from the life insurance basket, they also pulled up in trade. But on the flip side, you had Adani Enterprises, you had Trent, Infosys from the IT pack, dragging in trade, Tata Consumer Products, HDFC Bank, Power Grid. These were the stocks that truly led to some losses there. Kotak Mahindra Bank again from the banking space, and Bajaj Finance, another heavyweight from the NBFC space that continued to slip in trade. So that's as far as the markets are concerned in today's trading session, viewers. And we have seen the week close continuing for the second day in a row in this week as well. In fact, we will try to go back to our guest to try and find out what are the top choice questions. We will be shortly joined by him. But let me quickly just read out for you what exactly are the market momentum really and the news points really suggesting to you at this point in time. The big movers from the Nifty 500 basket, viewers, were from the graphite majors like HEG. 5% higher for this one. Look at Craftsman Automation from the auto ancillary pack. That moved up by 5%. Century Ply moved up from the space. And we also saw Emcure Pharmaceuticals led by Namita Thapar, famous Shark Tank, that we have seen about a 4% rally on the same as well. But let me also quickly look at the mid and the small cap names that managed just a tad bit of a move on the higher side, even as we closed in today's trading session. The mid cap names 0.4% higher for the mid-cap index that continued to outperform in a weak set of the market as well. We saw 173 point of an uptick on that front. We did see a lot of names that also made to the list as far as the mid-cap names are concerned. So that's as far as the move is concerned. That's on your screens. 0.3% higher for the mid-caps. It ended near the high point of the day. You can see a complete contrast with the Nifty, which had slipped to the low point of the day, and the mid-caps, they ended near the high point of the day. So it's the broader markets that are now attracting all the attention at this point in time. Now, of course, we will be waiting to find out what happens for the rest of the 3 days as well. Remember, the focus will be coming back to a lot of stock-specific news that will be seeing a lot of drive from the markets as well. Of course, we will also be looking at what happens to a lot of companies from the new age tech basket, even as they digest the labor codes as we have marked out for all of you. We will also be looking at some of the news points as far as HCL Tech is concerned. Remember, the stock to watch out for tomorrow from the IT pack will be HCL Technologies. Why? Because the company has signed an agreement with AWS to accelerate financial services transformation with AI and core mechanism and modernization as well. That will be the stock that you can keep on your radar for tomorrow. That's the stock that we will start watching out for tomorrow as well. But in the newly listed stocks, you can actually continue to watch out for a lot of names like Lenskart that ended higher today. But we did see, on the other hand, Grow also pulling up by 5% in trade today. Smart moves being seen on the recently listed stocks today. So 0.1% higher for Lenskart. Grow also moving up by about 5%. But Urban Company and Pine Labs also showing contrasting trends. Pine Labs also moved up by 4.5%. But we did see Urban Company dragging in trade. All right, viewers, we'll wrap it up at that note. With that, this is a wrap on Business Today show. Stay tuned with us as the news coverage continues on the other side. And in case you do have any questions about the stocks in your portfolio or mutual funds, your investments in gold or stocks, well, you can send me all your questions on the number that's flashing on your screen. Many thanks for joining in.